done well. Well, Prashant Paroda is now joining us. He's Portfolio Manager of Emerging Markets at Allspring Global Investments. Prashant, thank you very much. I hope you're enjoying your India trip and good to see you.
Very much so. Nice to talk to you, Prashant.
Absolutely. So let's just take it slightly at a high level, and then we'll come down to what you like here. It's a big sell-off. I mean, should we make how much should we read into what we're seeing right now? 4% down this week, for example. It's the end of the year. Maybe new allocations first 15-20 days of 2025. Or you think this is this will persist as we come back in January, as Trump takes gets into the White House, etc. What's your overall sense?
Yeah, I think the weakness in emerging markets might persist for some time, especially because if you look at, there's no real consensus on where tariffs would be. Dollar index continues to be strong versus the EM currencies. So I think this would be a near-term phenomenon. But having said that, from a longer-term perspective, we think the valuations on a lot of these names and a lot of these countries as well are pretty cheap. So once these headwinds go out of the picture, I think people will start reassessing the asset class.
Prashant, so in emerging market equities, what is the pecking order? Because the FIs have been selling in India.
Yeah. So I think so far, if you look at the emerging market, I think Taiwan has done the best, right? So Taiwan, and a lot of that has been driven by sort of AI capex boom. China has recovered as well. A lot of it is on the back of some monetary easing and expectations of stimulus going into next year as well. And India has done well as well. So if you look at these last three components, these continue to do well. But if you look at Korea, that's been very weak. Now, Korea, a lot of the weakness is Samsung related and DRAM related. And some of the Micron numbers on DRAM memory weren't that great this quarter as well. So I think the pecking order continues to be in favor of Taiwan, where AI capex continues to be very strong, and they're going into next year as well.
And where is India there in the pecking order?
India comes in the top 2 or 3 names as well. I think India is there as well. But obviously, you see, I think your channel did some analysis on earnings downgrades. So people are digesting some of the earnings downgrades. And we'll see, as long as there's some earnings visibility going into next year, I think some stocks relatively should do as well as in India as well. So I think India, if you look at the MSCI EM index and MSCI India index, 27% of that is still financials, right? And a lot of the large cap banks haven't really worked this year. And a lot of the concern going into next year is still on asset quality. So I think financials being such a big component of the MSCI index, I think a lot of that will determine how sort of the index behaves going forward.
Got it. So let's just step back a little bit again. So financials, I'm assuming, is a space you like, right?
Yes, you have to be very selective.
Yes.
You're always nervous investors in banks. And I think this quarter, you saw a divergence between asset quality between banks. And that hurt some of the banks and not hurt the other banks as much. So I think financials, I think if you pick the right bank and kind of do your work on asset quality, you can make decent returns over the next 12 to 18 months in this sector.
Since Allspring is also a big US investor, are you seeing a pullback there? We had Ed Yardini with us yesterday morning, and he was calling for a 10% plus pullback in the US. I think your view is the big risk, of course, is AI capex coming off. And if all that were to materialize, you think that'll hurt markets like India?
Well, I think India might actually be insulated. It will hurt Taiwan a lot more if AI capex kind of comes off. So you just look at the components of S&P 500, right? Like S&P 500 is up 22% year to date. And if you look, some of these, NVIDIA is up more than 160%. So a lot of this has been driven by this arms race that, I feel like Google, Microsoft, and Amazon have kind of taken over this arms race, and a lot of them continue to spend. And maybe they feel that this is existential for keeping their business. So we still see robustness in sort of their spends. But yes, that's a big risk for overall S&P 500 and even some emerging markets if some of this capex spend slows down next year, because people are building in expectations of growth going into next year as well.
So Prashant, given the nervousness surrounding the Indian earnings, will you hold off making fresh investments in India right now? And if you had to, where would you put your money?
So yes, I think pockets of financials seem interesting to us. Again, healthcare, I think continues to do well, and I think a lot of it will continue to have decent earnings going into next year. We're looking at some of the IT names as well. I mean, some of them, the mid caps have run a lot, but some of the large cap names that have not run so much, presumably discretionary spend. I know you were talking about Accenture, where discretionary spends haven't come back as such, but hopefully if you see a couple of quarters of visibility on discretionary spends, that could be a good place going into the next 12 to 18 months.
You mean hospitals, healthcare, hospitals, right? Not okay.
Hospitals as well, pharma,
Yeah.
There's some names, pharma as well. I think going into next year, that will also continue to do okay. I think the market will become very selective, and if your expectations are sky high and you disappoint, I think it will be tough to kind of maintain your valuations.
Nifty, actually in rupee terms, not dollar terms, rupee is up 10% this year. Nifty is up, sorry. Did I say rupee? I said the Nifty is up 10% this year in rupee terms. But the mid-cap and small-cap indices are up 27. You subtract how much ever we're down today, but it's a solid 25% plus on mid and small-cap indices here in India. Again, in rupee terms. And of course, the US has done what it has done, right? A remarkable 27 to 28% kind of a year, 2024. So we're coming off in a pretty strong way in that sense. Just one last question, Prashant. Are there any specific, maybe lots of newer sectors like renewable energy transition, etc., which are emerging? Some need some protection, and we're doing that. The government here is doing that, and markets are responding. But not just that, but anything to your mind which perhaps will be on Mr. Trump's radar, directly, indirectly, in terms of tariffs or whatever else? Since you track that pretty closely, yeah.
Yes, I think renewable energy. To the extent there were some companies that have a business of selling to US, and maybe they were importing some cells from China and making the modules and selling to US. I think what the Trump administration is kind of talking about is sort of maybe a blanket tariff across the board to make sure that the China tariffs don't end up having a trade deficit somewhere else. And with regards to China, I think they're still not clear about how to approach it, and I think we'll see more color on it as the year goes by. But I think renewable energy from a US perspective, I know Trump has administration has been talking about cutting back some of the spends on clean and renewable energy, but a lot of the states that get this spend are actually red states. So, for example, Texas and some of the southern states. So, I think there will be a balance there somewhere, but some of these companies will continue to do well in India, where there is definitely a big impetus to grow the renewable sources.
Got that. Thank you very much, Prashant. Appreciate you joining us, and great conversation as always. Enjoy your trip here, and we'll chat again soon. Thanks very much. All right, we'll take a quick commercial break here. We'll come back and we connect with Sanjay Parekh from Soham Asset Managers.